JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 2nd of September 2020, so welcome everyone. Welcome to this Tuesday's morning session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, a quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. So feel free to visit us here on jfdbank.com and click on the research tab right there on the top, guys. Now, jumping into, actually, before we jump into the charts, just a quick update on what's happening here globally in terms of the coronavirus. Now, the number seems to be, has stabilized. It's sometimes declining, sometimes not. However, it's not really going for any higher highs if we apply technical analysis on this daily, the chart of these daily cases. So, basically that's okay, I would say. Hopefully this can start moving even lower, but yep, the situation is this. We're getting closer to the 26 million overall, and well, hopefully that this number of deaths here will remain the same and not going to continue increasing, but again, unfortunately that might not be the case. So yeah, we'll continue monitoring the situation here, but for now, everything has stabilized somewhat. Now, jumping into the charts, the first one I want to touch on here is the Nikkei 225. Quick update, not going to spend too much time on it, but basically the idea here, what I was saying yesterday, that a nice good push above this 23,339 zone, that's what we need in order to get a little bit more comfortable with higher levels, and ideally we would like to see a nice daily close above that area before, like I said, getting comfortable a little bit with higher levels. As you can see, this 23,339 zone continues to provide decent resistance. So if we do get a nice break and a daily close above it, then higher levels could be met. Now, in terms of the downside, we need to see this one pushing back below this this short-term downside resistance line taken from the high of the 10th of June here, and then yes, we could maybe consider a bit of a larger decline here towards these lows that we saw here back, or the lowest point of July, or the lowest point of June. So keep your eyes on that one. Now, jumping into Shanghai Composite, quick update here. So the index is trading fractionally in the red. However, this index still has around 50 minutes left of trading. So that's why for now, we're keeping an eye on this little short-term upside support line, which, as you can see today, acted as a fantastic area of support. Yep, we're keeping an eye on this barrier here of the 3,457 that I talked about previously. A nice good pop above it, a nice good pop, and a daily close above that could, yep, open the door towards higher levels. But for now, it is where it is. It's stuck here, yep, for now we're just gonna keep an eye on this short-term upside support line and this barrier at 3,457. If this short-term upside support line breaks and the price starts falling lower here, still, as I mentioned to you guys previously, still the we will wait for a break below the 3,307 zone, somewhere around here, before considering a bit of a, let's say, a larger decline here, or I should say a larger correction to the downside, because don't forget that overall we're still trading above this upside support line taken from the low of the 19th of March. So again, if it moves lower here, then all this move down here could be seen as a temporary correction still. Now, jumping into the German DAX, the index yesterday drifted below the 21-day EMA, but on the positive side, the index managed to stay above this 21-day EMA here, shown as the yellow line, which some bulls might see it as a good positive factor, and this way kind of more buyers could be joining in. However, as I mentioned to you guys previously, that still the more comfortable level after a break of which we could consider higher levels could come on a break of this 13,314 zone marked by the highest point of July, and then yes, of course, we'll target the 13,795 level, which is marked by the highest point of this year. Again, for now, guys, all this is looking as a nice possible ascending triangle. However, we cannot really assume that yet until we get a violation of the upper side of this well, if we are assuming it a triangle, then the upper side of that triangle. In terms of the downside, pretty straightforward. A break of this upside support line taken from the low of the 15th of June and a drop below the low of the 21st of August here near the 12,633 territory could do the trick for more sellers and open the door for further declines. Gold well, had a nice run yesterday. It managed to hit the area close to that psychological 2000 zone, but just kind of then got pushed back by the bears, got pushed back below this barrier, this 1976 level that I talked about previously. And what I was saying, that if we get a nice strong move above it, then yes, this increases the chances of a possible further move north. However, as you can see, yesterday the daily candle closed below it. Now, this of course raises a few concerns, it raises a few concerns here, but of course, and as long as the price remains above this this medium-term upside support line taken from the low of the 20th of March, still the upside scenario is the more likely one. And if that this upside line gets broken and the price starts falling below the 1901, 1902 territory, somewhere around here, then this is where it could become a little bit more interesting for more sellers. But again, for now, guys, keep your eyes on this 1976 territory. A nice good break above it again and a daily close above it, then yes, it could in a way increase the chances for a possible further move north. Now, I can see there's a message in the chat room here that the image is a little bit blurry, so I hope everything is okay, guys. I hope you can hear me and see me well. At the moment, everything seems to be fine with my speed here. It seems to be okay. So yep, so again, I don't see any technical issues from my side, but like I said, hopefully everything's okay on yours as well. Now, jumping into DXY, and this index here, the dollar index, is well, it's finding good support near this 92.24 level. And although we had a bit of a move up and down here recently, for now, to be honest, looking at this picture, everything seems to be working out nicely in regards to the idea that I talked about last week, where I was saying that we have ourselves a nice positive divergence here with the RSI and the MACD and the chart itself. So basically, this means that there could be a possibility of seeing this one pushing higher. However, I'll still remain on the skeptical side a little bit, because again, from the technical side, I would prefer to see a push above at least above the 21-day EMA here, shown as the yellow line, before, let's say, targeting slightly higher levels within this correction to the upside, because again, this whole move higher could still be seen as a correction up until this downside line taken from the high of the 24th of March, and if this downside line provides resistance once again, then another round of selling could be possible. So guys, again, for now, basically to sum up this, on one hand, yes, we have a nice positive divergence here, which could lead to some higher levels, but to get a little bit more comfortable with that idea, we would like to see a push at least above the 21-day EMA, which recently, as you can see, acted as a very nice area of resistance. And if it doesn't do anything of that, then, well, continue monitoring this 92.24 zone. Another slide below it could, could send the price even further south. Ethereum managed to reach this 485.60 zone I talked about yesterday, and this is where it found resistance. This level here, and let me just quickly capture this. So the 485.60 level marks the high of the 24th of July 2018. I've talked about that level, and this is initially what I was targeting, and managed to reach my level here. And now the big question, can it continue pushing further north? The way we're going to do here right now is this: I'm going to keep an eye on this 485.60 zone. A nice good daily close above that could, I should say, a nice if the daily candle remains above that area, then yes, the next target is the highest point of July here near the 516.80 zone, and then we would take it from there again. But for now, long story short, we need to see a nice good pop again above the excuse me, 485.60 zone in order to get slightly more comfortable with higher levels. In terms of the downside, the drop below the 411 territory right here, which is marked by the inside swing high of the 24th of August, could open the door towards a bit of a larger correction to the downside, because at the same time the price would be placed below the 21-day EMA, and the crypto could then drift towards the 363.30 zone, or even below that towards this upside support line taken from the low of the 13th of March. Now jumping into a few pairs, and the first one I want to touch on here is AUD and ZD. Now this morning we got some data from Australia, where the Australian GDP figures came out as a disappointment, well, I mean, that kind of pushed the Australian dollar to the downside here a little bit. It's looking at this particular pair where it's a battle between the two commodity linked currencies. You can see that the New Zealand dollar is currently winning, and in this pair, this pair is actually moving right now back below this level. I talked about this previously, this 1.0880 territory. And of course, now the big question here is, will this medium-term upside support line taken from the low, the 18th of March, will it provide decent support? Of course, for now, we until we see that clear break, we cannot really talk about any downside. So in a way, if this upside line does provide decent support, we could see the rate reversing back to the upside. So let me just grab this arrow and adjust it. There we go. So that's going to be the idea for now. Like I said, we cannot really talk about any downside until we get that break. If we do get that break, and the daily candle remains below this upside support line, then, well, I mean, the bulls should brace themselves, because the bears could start taking the lead on this one. But again, until then, we're not really we're kind of moving away all that skepticism, as long as the rate continues to balance above this upside support line taken from the low of the 18th of March. US dollar against the Japanese yen, so this one continues to oscillate around the 106 level. Again, the same. I'm not going to spend too much time on this one because the same kind of scenario, the same analysis remains on this one. We need to see at least a stronger move above this 106 zone and above the 21-day EMA in order to go for a bit of a larger correction to the upside, because we're still trading below this downside line taken from the high of the 24th of March. GBP/CHF continues to move nicely to the upside. As I mentioned yesterday when I was covering this pair, my target for now is the 1.2260 territory marked by the highest point of June, and then I'll take it from there. So like I said, I don't want to kind of rush into anything here yet. I mean, if it travels above this 1.2260 zone, that's wonderful. Our forthcoming higher high is confirmed then, and then we could start looking at some much higher levels. But again, for now, given that the pair did have already a nice decent move here, keep your eyes on this 1.2260 zone. If it provides resistance, we might get a bit of a correction here to the downside, maybe a move back to the 200-day EMA, and then another. If that 200-day EMA can provide support, we could see something like this happening. But again, for now, the target is the 1.2260. A quick update on EuroCAD as well. I talked about this one yesterday in my Traders Tea Time, and basically the pair managed to drift back below this downside line, and this is exactly what I was talking about yesterday, guys. And yesterday in my Traders Tea Time, we were trading above this downside, the short-term downside resistance line taken from the high of 31st of July. We were also above the 21-day EMA, but what I was saying that to get comfortable with higher levels, we need a break above the 1.5647 zone. As you can see, the pair didn't even move above that area and drifted back down. Now it's trading back below this downside line, which creates a bit of a bearish atmosphere here. However, if you want to look at some lower levels, wait for a drop below the lowest point of August here near the 1.5470 zone. A nice good drop below it, would confirm a forthcoming lower low, and slightly lower levels could be met here. For now, we're going to remain probably a little bit on the neutral side, and keep an eye on these two levels, the 1.5470 on the downside and the 1.5647 on the upside. And finally, Euro USD. So the pair here is it drifted higher yesterday. It tested that psychological 120 zone, and this is what I was saying, that if it finds good resistance somewhere near this psychological 1.20 zone, there is possibility of seeing this one correcting a little bit to the downside. For now, it is doing exactly that. So yesterday, you can see that by the yesterday's daily candle here, it pushed higher. It created this new high here, and no, not new high, but new high for I would say for the year. And it then kind of ended up selling off heavily here. So now we're seeing a bit of a continuation of that move to the downside. Even if it drifts further south here, we'll keep an eye on the 1.1815 level. I talked about that area, and of course on the 21-day EMA, which, as you can see, continues to provide decent support. But even so, even if these two levels surrender, and then the pair starts drifting further south, we'll still keep an eye on this upside support line taken from the low of the 14th of May, which could still provide a decent hold up. So that's why, guys, for now, guys, be very careful. If you want to aim for some higher levels, wait for a pop above that psychological 120 zone again, and then target higher levels, because at the moment, looking at this picture overall here, we did have a decent move to the upside here if we take it from the around mid-May, and basically maybe a bit of a correction here could be quite healthy for this pair, but like I said, we'll keep an eye on this upside line, but initially we'll keep an eye on the 21-day EMA. So again, keep your eyes on this one, guys. Could be quite interesting. For now, like I said, if it suddenly reverses sharply to the upside, the level to watch is 1.20, but if it starts drifting lower here, then keep your eyes on the 21-day EMA. That could be our main target for now. or if it drifts below that, then all eyes are on this upside support line taken from the low the 14th of May. So guys, I really hope you found it useful, and thank you very much for watching and listening. I'll have to wrap it up here, but if you really enjoyed this one, yep, you can join me later on my Traders Tea Time, as always, 13:15 GMT. I really appreciate your time. So have a wonderful trading day, guys. Stay safe, and I'll see you later. Thank you very much, and bye-bye.